Cool. All right. So, hi everyone. Thanks for joining this morning. Welcome to our latest webinar with Gemini, JST Digital, and obviously myself and Will from Kaiko. We're going to get started now shortly. This is, I think we've got around, we've got a quorum of people, I think, now, so we can kick it off. I'll introduce myself, introduce all the guests, and kind of give you a roadmap for what we're going to go through today when we're chatting about Perps, basket indices, and all the fun stuff. So I'm Morgan McCarthy. I'm on the research side here at Kaiko. I do our weekly data debrief, and I work more recently on our index and focus, which covers everything on the index and benchmarks rates side. So glad to be here with a great panel. We've got Will Kai, head of sales at Kaiko, Billy Chan, head of exchange liquidity at Gemini, and Ted Morakis, co-founder of JST Digital. I'll let you guys kick it off and give a quick intro on yourselves before we jump into the questions. Do you want to take it away, Will?
Sure, I'll go first. Thanks, Adam. Great to be here. As Adam mentioned, currently I look after our sales team, but my background is in TradFi, is in trading. I traded commodity indices for many years, JP Morgan in New York. But pretty excited to be in the crypto space, especially this year. And I'm really excited about the opportunities opening up and talk about basket indices and perps.
Nice, thanks. Billy, do you want to jump in next?
Yeah, sure. My name is Billy Chan. I'm head of exchange liquidity here at Gemini. I've been in the crypto space for about 7-8 years now, and seeing this evolve, it's actually quite exciting.
Nice. Hello, and Todd, you've been in crypto. How long have you been in crypto?
Yeah, I've been in crypto. My origins are from traditional finance for about 25 plus years, and I've been in crypto for 7 years, and founding partner at JST Digital Trading and Technology, and we are a liquidity provider in the centralized and decentralized space.
Nice. And you're based in Singapore, right?
That is correct. I'm based in Singapore. Nice.
All right. Well, I think we've got a good panel to get into it. So I'll kind of kick off more broadly on like index investing. Then we're going to look at the sector and factor indices, and then kind of maybe bring us towards the benefits of basket investing. So on that, Billy, I guess maybe I'll jump over to you first. Like, what is the difference here with basket investing? I know we talked about it the other day, and you had some really interesting things to say. So I'll let you jump in. What the benefits are, why it's different, and why now?
Yeah, I think, as we've seen sort of the crypto market evolve over, the last 10, 12 years, we've had a number of cycles where sort of different projects have come to light and evolved. Some have been successful, some have not been so successful. But if you look at sort of, I guess, January 2025 numbers, there's pretty much over 10,000 cryptocurrencies in the market. And to finding the right project to invest in is extraordinarily difficult. And from a Gemini perspective, what we want to do is, be the world's most trusted crypto platform and list tokens that we find, have gone through necessary due diligence. However, what we also find is that, going through that process is quite long and quite tedious. And so to provide, our investors and our clients access to different projects, what we actually saw was that, an index-based sort of approach may be more efficient and more appropriate due to the fact that, it provides diversification of exposure, and this applies both to the upside and the downside of the market.
Nice. Well, I guess, do you have anything to add to that then, from your perspective on the Kaiko side?
Yeah, absolutely. I think all of us have TradFi backgrounds. I mean, in the baskets and indices it's a natural progression, right? It's not about if, but just when. Talk about stocks, it's S&P 500. No one just say, Apple, or well, these days maybe Nvidia is in a lot of people's minds, but really it's the indices, the baskets. I think the timing with the U.S. markets regulations opening up and overall overall state of markets. Sure, we're a bit of a, right now the price is a bit of a drawdown, but still I believe it's really in a growth stage, especially this year, 2025. Basket is a natural extension where people should be looking at. And to what Billy alluded to, right, the efficiency, it's you, especially for let's say for retail investors or traders, to pick different stocks, to create your own basket and potentially rebalance it. And then there's a lot of over trading or inefficiencies. Having a standardized basket, whether it's top X or maybe thematics, I think is really the current state or next natural step in our current stage of development in the space.
I completely echo Will, and a couple of points on sort of index-based products are not revolutionary per se, right? They've been in TradFi for quite some time, with ETFs and ETPs. I think as Will mentioned, this is digital asset indexes. It's just an evolution, right? It's just basically an evolution of this space. A good tidbit, right? If you look at sort of TradFi ETFs, they represent about 28% of the daily traded volume, right, in the TradFi space. Whereas, if you look at crypto ETFs as it currently stands, that's still only 4.8% of the daily traded volume. So there is a market there where indices, will thrive. I always, like to talk about the story where, we're having dinner with family and friends and new people you meet, and they find out, oh, you're in the crypto space. What should I buy? Right? That's always a difficult sort of conversation to have. And with the introduction of indices, it's like, okay, well, what is your risk tolerance? Are you into AI? Are you into sort of less riskier sort of baskets? Are you looking at DeFi? These are the benefits of DeFi, et cetera, et cetera. And so instead of talking about an individual project or token, they can get exposure to a theme of tokens.
Yeah, I think I needed a basket indices a few years ago when I was suggesting tokens to people. I'm not getting invited back for dinner that often anymore. But, yeah, Todd, to bring you in on that, what is it like from a market maker perspective? Because I imagine, like, for you coming from a TradFi kind of angle at this, when you got into crypto, it must have been the Bitcoins and the Ethereums, and there must have been sort of broad spreads that you could kind of go in there and pick up, like it must have been kind of like easy pickings, kind of a lot different. And now it's kind of developing. Do you see how do you see that picking up, and where are we at that point? And kind of the move towards indices and the move towards more kind of maturity.
Well, I'd just follow up on what both Will and Billy said. When as we get more regulatory clarity, specifically in the U.S., I think, but it's other places, but specifically everyone's been waiting in the U.S. The industry is going to continue to grow, and then more products will come online. And I don't see this being really any different from a product perspective than TradFi. And I would expect indexes. So from a liquidity perspective, we could even go back. The first set of indexes in this industry, we were speaking about it before, actually was FTX on their exchange. They started it back then. It may not be a great example considering what happened, but that's where at least was starting. And it maybe was, we'll just say it was a little before its time. And but as more retail investors come in, as more institutional investors, particularly in, I would say, North America and Europe come in, they have interest in indexes, right? And I think Billy gave you some numbers there, which it's clear people will have interest. As far as providing liquidity, I think going back to your question on that, it shouldn't be an issue for the people that provide liquidity, obviously depending on how bespoke the index is. Now, I believe since we are right where we are right now, the indexes are going to be extremely bespoke. They probably won't be as liquid as the ones that people want. Whether let's say, hey, I want a group of layer ones, I want a top 10, or I want the payment coins, or I want specific things. People will have an interest in that, and I think it's important not only from an institutional side and from a liquidity provider side. I think it's really more important for the investor side. What does the investor really want? And I think if you look back probably a couple of years ago, even maybe the correlations were very high between most of the coins, right? Now we're starting to see correlations change a bit. And I think if I'm a retail investor or I'm not in it every day and trading this every day, it might benefit from a portfolio approach of investing, which really is the index, right? And so I expect that to happen at some point. I'm not sure when it will happen, but clearly there's more interest coming in on that.
Yeah, the correlation thing is interesting because I speak to a lot of journalists in my role, kind of doing it from the research side, and I get that question sometimes. If I'm trying to talk about an index or something, it's sort of the first cynical question is, but crypto's everything's quite correlated, and I kind of dispel that with one of our research reports in the KT5 that those 5 assets aren't that correlated, and they do move individually. But how do you address that, Billy? Like, I guess are we limited in that we can get to a top 10, a top 5? Going beyond a top 20, it's probably more difficult. Then the questions probably are there, or is that what you're saying? Like, as we get further out, as time matures, we can get bigger indices, bigger baskets. But right now, it's the 5s, 10s, or so.
Todd, did you want to?
I'm not going to say this. Yeah, I got it. Yeah, I'm not going to say the sizes, right, per se, to start off with, because we're still in the beginning. But there will be interest. Even today, if you look at the market today, right, we sit around and discuss all day layer ones, for example, and look at their valuations and try to pick apart what we think has better value, not. And that isn't as easy, right? So when you're entering into the space, or even if you've been in this space, right, if you want to compare it to TradFi, do you have research analysts that are sitting there and working out which is right, which is wrong, what do you want to be and what you don't want to be? There will be people that will do that. But I really think it starts off with maybe a smaller amount of coins, like I said, a certain sector, and then it will continue to grow, right? I obviously I've been in the space, as I said, 7+ years. And the conversation that you guys would have had, let's say, at the dinner table or with friends, we'll have conversation with clients that are either in the space or potential people that want to know what we're thinking. And it's not investment advice we're giving them at all, but we're just saying is, it's more to the point of, do you want to hold Bitcoin, or, hey, I like payment coins, what do I do? And we could see that when someone says, I like payment coins, or I like the top 5 layer ones. There you go. There's your index that people are looking for. And then hopefully it gains the traction that you need.
Yeah, I'll probably add on to that as well. I think, if we look at crypto as a whole, it's still very much in its infancy stages, right? And a lot of the token projects are relatively new and trying to find utility, within the market and problems that it's supposed to be addressing. As sort of the market, as I see, evolves and gets more mature, and actual token projects actually start to gain more traction in terms of its actual utility, that's when you sort of start getting a much bigger index, right? Like if you look at Bitcoin, ETH, XRP has its use case, Solana has its use case, and then from there, like each of the different sort of projects and tokens have a use case, but I wouldn't say a proven use case as of yet. So, I could see the index growing and sort of the size growing. Today, a top 5, top 10, maybe a top 20 is already pushing it. I'd hope for a day where we get to a crypto 500, right? Like, that would be a day worth celebrating.
Yeah. And probably, hopefully we'll all still be around in crypto by the time we get there. But I think touching on that, Will, then we're talking about I guess what we're saying is, if you mentioned there, Billy, like people asking you what things to invest in and how the indices steps in there. And I guess, Will, we've seen the success of these products in traditional finance. We've touched on that. In crypto, like so far from what you've seen, can you capture that growth and mitigate the risk? Like, are the benefits there the same way, or what are the kind of benefits you've seen of these sector and factor indices? I know we've launched a few recently.
Yeah, no, I think I echo to what Todd mentioned earlier. I mean, it's coming. It's just in terms of timing, and maybe alluding to what we were talking about just now. Is it 5, 10, or more? our benchmark rates and index business, we cover two segments, right? One is benchmark use, for example, working with Billy and Gemini in Perps, in baskets, exchange derivatives. But we also work with all the ETF issuers around the world, especially now in the US. The consistent feedback is 150 or even 20 is probably a step too far. And it's not just investor comfort, but there's also other elements to regulatorily their comfort, and not just the regulator, but exchanges. If you look at in Europe, each exchange has their own token eligibility. They got their own list. Sometimes that list is only like 20. So if you have a 20 asset, that's not going to match up to the eligibility there. And then also we also run into issues with custody. Not a lot of tokens are not supported by some of the major custodian players. There's another building a blocker there. So all these problems will be solved. It will evolve, but it's just not. It doesn't happen, with the snap of the finger. But I think with the new SEC coming in the new chairman and the change of attitude in the U.S. with the SEC in Congress in terms of framework and regulation changes, we definitely will see basket ETFs. And once that launches, we get more clarity on what tokens the SEC is potentially comfortable and the U.S. exchanges, and that probably has knock-on effect in Europe, in APAC. So look, with the SEC is not led by Paul Atkins coming in. He's not Elon. It's not going to be crazy stuff happening at SEC. So there will be a process. There will be following the existing time frames and so forth. So we won't see that happening, say, the minute that Paul Atkins is confirmed. But I think throughout this year, we'll get more clarity. And I think with baskets, it's going to come first the top ones and then the thematics. And people will like that. I mean, it's not just for investing. You can do long shorts on different sectors on where you prefer. You can easily rotate from one sector to another. If AI is not doing well, they may be going to DeFi or you're going to DePIN. So I'm pretty excited. I think all of us coming from TradFi, this is all basic stuff. But I think with crypto, it's got to be a little bit patient. And I think the timing, is right. This time around, I think baskets and indices is going to take off.
I completely echo your point, Will, and I think you've hit the point in terms of regulatory really well. When I look at sort of any investment product, right, and sort of the path that crypto has come from, from its very much early days, and sort of with the MAS regulations, with the SEC regulations, with MiCA, MiFID, et cetera, and regulatory clarity, ex-US, right? Consumer protection is the number one thing, right, on a regulator's mind. And so when I look at sort of the crypto space and individual token and contract listing, right, like the process is actually quite opaque, right? Like out of 10,000 tokens, why is this token being listed? Or out of the 1,000 tokens that have been constructed and initially launched in the last week, why are you launching these 50, right? So the process is actually opaque. With an independent index provider with a transparent rule book, this actually provides much more comfort to investors, right? So it's no longer a exchange doing the listing process. It's actually a third party providing an index in which the clients of the exchange can get exposure to. Another point from a regulatory perspective, and perpetual futures have had a bad rep. I'll be very, very clear about that, right? And that's because it's often tied to an ultra risky sort of product. However, if you think about it, perpetual futures and margin are actually separate products and can be decoupled, right? The reason why margining really occurs in perpetual futures for mono assets is because why would I use a perpetual future with 1x margin when I can buy spot, right? It's more capital efficient from a mono asset perpetual futures perspective. But if you look at indices, actually, it is more capital efficient, but you can actually do a 1x margin pre-fund into a perpetual index, future. And from a regulatory perspective, you've sort of addressed a lot of the consumer protection side of things.
Interesting. And that's because we were talking a lot about ETFs, and that's kind of been the talk in crypto for the last year now, is everything ETF and basket. So I guess like Todd and Billy, will, like, do you think there's more to these indices as well than just like backing ETFs? Like, is it also going to be potentially, as you touched on there, more like perp products, maybe in the US with regulatory changes and things like that? Or like, because I know, Todd, the other day you were talking about how crypto's not reinvented. It's going to follow the TradFi thing of, start kind of, pretty vanilla, and it's going to get a little bit more complex. Like, where do you think we get to with these kind of index products and what they back? Is it perps? Is it just ETFs for now?
I would say as...
Yeah, go for it. Go for it, Todd.
Yeah. First of all, I think even if we go into the products that we've already seen, the options market, the structured products market, lightly structured products market that has kicked in, and that would be normal for me, where it's solving either it's solving a customer needs solutions, right? And so these products come in, and when I said from the TradFi space, the reason some of these products entered the space was because there was an actual need and the client had an interest, and it was in the best interest of the client. Okay. There were some products, I'm sure there were, that may not have been as beneficial. And of course, they'll hit the papers, right? Which we've seen in traditional finance. But I think what you're looking at here is really, it's from the investor side. The investor side does have an interest. They have an interest in this space. We could see it. So for example, the ETFs, when it started, it kicked off. Bitcoin's the biggest. We understand why Bitcoin's the biggest. One, from a regulatory clarity perspective, that was there. Also, it was the easiest thing for some of the institutional players to understand. And it's easier to read, understand, and it's always written up, right? And then as you go down the line, the ETFs will continue as it is, and it's people are trying to get to the top 5, top 10, or whatever they're going to get to in that. That's, again, investor interest. I think it's mostly institutional investor interest as opposed to retail, right? As far as indexes, that's the next thing to go there, whether it be, people, I guess, can do an ETF index, but I think also, if that's what you're referring to, but I really think people are going to be looking at indexes on exchanges, right? Because that's normal, right? I think another thing that you have to get comfortable with is the credit risk of exchanges, right? Are you comfortable with your money? Are they regulated? Where are they regulated? What are the rules? It's not as 100% clear unless you're in this space and you do understand it. And obviously, I don't, what happened over the weekend or earlier this week, that was kind of a bit deflating. And what it appears to be, obviously at buy, but what appears to be, they're doing what they should be doing, transparency, going through it, and everyone's understanding what's happened. But I think for the exchanges particularly, and when it comes to the indexes, that will play a part of it. And again, regulatory clarity is what I think we've all been talking about, particularly Will and myself were going through, as regulatory clarity in the US, because the US really like indexes, or North America likes indexes. And I think it's all about investor interests on this side, and it's definitely there, right? It definitely will be there. It's just a question of timing.
Gotcha. Is that Billy, I guess, kind of to bring it back to you again, is that what kind of got you, Gemini, and you guys interested in these products now? Because I know there's been some basket perps in the KSL2 and things like that. Like, is it the regulatory clarity only, or are you seeing the demand from customers as well? And is that globally? The US love ETFs, they love indexes, but is it all more kind of a global thing as well?
Yeah, and sort of all drives from a number of different factors, including sort of our client sentiment, and just sort of, if you look at Gemini, we're primarily sort of a retail exchange. And so we actually do get a lot of feedback in terms of, unique value propositions in comparison to the other players out there. If you go back to sort of 2017, 18, 19, there was probably one perpetual futures exchange. You fast forward to 2025, and there are pretty much a dime a dozen now, in different spaces. And as Todd mentioned, different exchanges have different sort of risk associated with them. from a regulatory standpoint and a counterparty risk standpoint, right? So what we wanted to do was make sure that Gemini, being the world's trusted crypto exchange, we wanted to make sure that we address and create a unique value proposition for our clients. And what we could see that everyone's doing 400, 300, 200 contracts on a mono asset perspective, but where does Gemini sort of stand itself out from? And that's where I sort of came up with the idea of an index, and utilizing sort of the underlying Perps engine to facilitate that. Now, people have asked me, well, why not spot? And I think the challenge with spot sort of indexes is the rebalancing side, right? So, for example, if you do a rebalance of the index every 3 months, how do you rebalance the existing positions from a spot perspective? Because that will actually be an underlying spot position within your portfolio. Do you, like an asset manager, trade on behalf of the client to exit the position and do the rebalance on their behalf? It becomes very inefficient from an operational perspective. And then you sort of raise the question on, if they were to sell the underlying asset on a spot perspective, how do you deal with capital gains tax in the different jurisdictions, right? Whereas from a Perps futures perspective, because the rebalancing is happening in the background and on the index side, then there's actually no capital gains to be made, before it's actually the position's exited. So that's sort of how we came to it, and the way I see it, again from a regulatory standpoint, and Todd sort of alluded to it, indexes are very attractive in North America. I am, to be very, very honest, betting that US starts providing more regulatory clarity, and setting all this infrastructure up when US does open up. Will be beneficial to Gemini.
Nice. Will, did you have anything to add there? Because I have questions myself, if not, but I just wanted to bring you in if you have anything to say. Oh, I think you're on mute.
So maybe one point to expand on, and Billy mentioned about. Actually, I was thinking, does Billy listening to our conference calls? But one of our biggest push is to work with exchanges and regulators around the world to have a proper framework for asset vetting, asset eligibility, or exchange vetting eligibility as well. Because we're the one. So first of all, we're a regulated benchmark administrator in Europe, regulated under EU BMR. But we're also one of the very few currently independent crypto index providers. We're not owned by an exchange. We're not owned by asset managers. So we really have a neutral, independent voice. So that's actually been very helpful, talking to exchanges, talking to regulator, trying to pull everyone together to have that kind of a framework to really helpful for indices, right? Because indices composed of different tokens, to have that framework so that everyone's comfortable that we can build these indices, have tokens and exchanges and custodians potentially to be part of this effort jointly. So I think that's happening, and we're really trying to push, with the exchanges in listing ETP, listing exchanges in Europe with regulators, CFTC, with SEC, going to Hester, the crypto task force. So we're really trying to push on that front to have to build a foundation to push this space forward.
And I mean, just echoing again Will's point. If maybe I'll spell it out pretty clearly. If I'm an exchange and I run my own index, I'm also listing sort of tokens and projects. There is a clear conflict of interest on whether those tokens belong in the index or not, right? There's a conflict of interest in terms of, does it really actually fit within the rule book? Or am I trying to promote these new listings into the index, which actually gets more volume and liquidity? Having an independent third party like Kaiko run the index and manage the index against their rules and regulations, takes away this conflict of interest.
And Todd, actually, that's an interesting one. From a market making perspective, is it is it easier to get more comfortable when an index is independent from the exchange? There's kind of there's that kind of wall between the two. Are you happier with that?
Well, I first off, if I'll start off with, as long as there's regulatory clarity, things are easier to do, right? And you never want a conflict of interest. And I'd also say, I don't know if there is a conflict of interest, depending, because every situation is different, right? So it's tough for me to tell, but it's always better to err on the safe side, right? But yes, by having an independent one, then there is never a question, right? That is very clear. I think also you should be looking at that. It's not only that. I would think if you want to look at other things relating to, one thing is getting listed, but then one is what's the payment of the listing, right? Because we all, you have to go in and I know, Billy, I'm not as experienced on how that happens during listings. We do understand it, but I'm not the one on the team that is the expert on it. And it's also very important that if, then people have to look at what are the holdings, who has what, like going back to what an asset manager would be. If you're an asset manager that has it, but yet you have 10% of the token and you're trying to push that to be in, I don't think an asset manager would do that. But again, it's better not to be in that conflict of interest.
Interesting. And actually on that point, like the kind of transparency, and it's a lot more, because crypto's retail first, Billy, you touched on it, and you're hearing things from clients, and it's almost 80-20 retail. It's not really got institutionalized yet. Is there more of an emphasis from the retail users, the end customer, that they want that transparency, questions that you might not get if you're on an institutional kind of side of things, where there's more kind of steady practices and people are kind of rules of the road? But in crypto, it's kind of new. People are learning as they're investing. Do you find that there's a difference then dealing with a retail first market?
Yeah, so just to be clear, Gemini is much of a retail first sort of exchange platform. As a crypto industry, depending on how you look at it, in terms of volume, obviously the institutions still dominate most of the volume, but obviously there is still a very heavy retail market within the crypto industry, and it's continuing to grow as the cycles go through, the bears and the bulls. What I would say is that, as the landscape of crypto and the number of projects increase, right, it becomes much more difficult for a retail investor to navigate, right? And as these technologies start to evolve, if you think sort of, just a couple of years back, it was really only layer ones. Everyone was just really doing layer ones and sort of building off Ethereum or building off sort of, Satoshi networks and stuff like that. But if you look at the sort of the market today, the technology evolution has gone, exponentially greater. And so as a researcher or as a sort of a retailer to researching these different projects, it becomes more and more difficult. You only have 24 hours in a day, but now you're trying to read 10,000 white papers instead of 20 white papers. And so I think these indices have become a need and a want from retail who are time poor, essentially, but do believe in the Web3 space and want to get exposure to it. That's the way I see it. But any ecosystem can't survive with one or the other. Where there is retail interest, there's also institutional interest in it.
Interesting. And I think we're coming up on towards the end of the webinar now, so I'll jump into the questions, but I think some of them actually fit in quite well with the topic we're on right now. And one of them would be, we're seeing a question in the thread there from what that broad-based market index looks like. What's that S&P in crypto right now? We've touched on it and we've talked about different aspects and what you can have. You can have layer twos, you can have different themes, but for you right now, Billy, Will, Todd, what's the kind of like crypto? We talked the other day, Todd, and you were saying Bitcoin is more like gold. I mean, when I read media reports, I'm reading Bloomberg or the FT, they're talking about crypto. They don't have an index they pick to. They talk about Bitcoin, but you were saying that's more comparable with a gold, so you shouldn't say it. So what are you looking at? Are you looking at Bitcoin, ETH, XRP, and the sort of top 5 things by market cap, or what do you think is the ideal sort of comparison?
Yeah, I would. When we look at it, when we trade it, we look at Bitcoin differently, and we do expect correlations to change a little bit to, let's say, layer ones, layer twos. We could look at DeFi protocols. We could look at in the layer ones. We could look at, you could separate the layer ones in which way you want to look at it. There is the AI coins. We could keep on going. There's so many coins that we could go and talk about it. And I think when we are so in the beginning of this right now. So look at the S&P 500, right? Or look at any of the index in the TradFi world. There is always a roll. Things are getting kicked out and put back in, kicked out and put back in. And right now what we have, if you look at crypto, I would say you have a main exchange, right? It's all one. You put a main exchange and then you put the penny stocks too. I'm comparing TradFi, like Main, the secondary exchange, and penny stocks. You got all of them sitting in the same everywhere, right? But what does a S&P 500 crypto look like right now? I don't think there's an S&P 500. I think there's probably a crypto 5 maybe, right? Top 5, top 10, and then it will slowly, right? We'll get into more detail, and then I think you'll get more like I don't know, maybe not a crypto S&P 500, but you will move out that again. I think we're just still at the beginning, and I want to clarify again, because I know we talked about this, and we view Bitcoin very differently than maybe some other firms. We do know the correlation is very high too with clearly the top coins. But I would say the answer for that one is I would think there'd be a crypto 5 to start with, or maybe a crypto 10. And you could say they're the top 10 or top 5. You got to take the stable coins out, but I don't even know if they're the top 5 or top 10. But 5 may be in the top 10, and they choose, and you choose accordingly.
No, I completely agree with you, Todd. I think if we were to force an equivalent, then yes, I would say probably the top 5 would be a good sort of equivalent to an S&P 500. But let's not forget here, right? Like the S&P 500 is made up of multiple different sort of industries. Whereas if you look at crypto, we really are starting to have themes in the last year or two, really, right? You really didn't have a DeFi sort of theme a few years back. You didn't have an AI theme a few years back, or a layer 2 theme a few years back. So if you think about these themes starting to evolve now, then you really start building sort of the ecosystem and sort of the winners in those different themes. Then the construct of the top 10 in those themes would then construct to a crypto top 50, right? And that's the way I see the evolution happening today. Probably top 5. 2 years from now, who knows?
Yeah. I might bring you in on this, Will, because we had this debate internally. In that top 5, I mean, I know where I stand. Do you have meme coins in there? Is there a meme coin? I mean, some of the oldest assets now are Dogecoin's been around longer than a lot of these other assets. So where do you stand on that?
Yeah, no, that's a discussion, and it's not we as the index provider, we try not to build indices or make these decisions in a box, right? In our own heads. We try to see what the market is looking at, different segments, whether it's retail trading, whether it's more institutional demand, ETFs, and also the regulators are doing. If the regulators are coming in and says meme coins are no good, then it's going to be difficult to put a meme coin into top 5, top 10. But that also makes me think, we kind of, all of us alluded to it. What's great about basket is, maybe to the question of S&P 500 as well, it continues to evolve, right? It is not static. Yeah, we currently have most of our baskets are quarterly rebalancing. So maybe a top 5, a top 10 definitely would change over a year. And that's very different than, say, S&P 500, where, I mean, it's market cap weighted. It really, the overall index doesn't change much. You might have some change on the lower side, but for crypto, a top 5 or 10, even top 5 can very much can change as we have one token flip the other ones. So that's quite interesting, and that helps with I think with whether it's investors or traders. You don't have to worry about, what I alluded to before, kind of picking the stocks. The index will do a lot of that for you, And it's interesting to see how these indices evolve even this year as we go through the different market phases.
Interesting. That actually touches on one of the questions in the chat there, which is about index investing in perps versus index investing in spot. And Billy, you had a really interesting point earlier on the tax benefit there, that like you don't create like a taxable event, a capital gains event when you're rebalancing the perp. Is that the only benefit there, or is there what else?
Just operational efficiency as well, right? Like from a financial perspective, obviously, it creates a capital gain sort of or capital loss depending on which side. But just from an operational perspective, right? Like, I actually had this discussion with a couple of people here at Gemini as well. They're like, oh, why perps and not spot? So the first time you invest in a basket, it's pretty easy, right? So let's say, for example, on spot, you do a top 5 and you click down, the drop down says top 5, you click buy and you invest $100 and it does the distribution for you. Now you've actually got the underlying coin, say, for example, Bitcoin, ETH, Solana, Ripple, and Doge, for example, right? And imagine 3 months down the track, your top 5 has changed, or your top 4 remains the same, and Doge is no longer within the top 5, and it's replaced by Cardano, right? For example, to then buy those top 5. So now you've got increased positions in Bitcoin, ETH, Solana, Ripple. What are you going to do with your Doge, right? Like, do you sell the Doge, incur a capital gain or loss trigger, and then replace that with Cardano, and how much Cardano depending on the price? Like it really creates a lot of complexity on a spot sort of ETF versus a perpetuals ETF, where you don't really care. You're like, I'm going to go into top 5, and 3 months later the index has rebalanced, but there's nothing to do from an operational point of view. You still got a position in there. There's no buying or selling, right? It's just that the position, the constituents have changed.
Gotcha. Now that makes a lot of sense. I'd say, Todd, I think I cut you off there before I passed over to Billy. Did you have something to add on the meme coins in the top 5, or where do you stand on?
No, I was going to say meme coins. I would make it something separate for me, just because I consider that a different asset class, I'll call it, in there. They could be top 5, but I think if I'm playing in meme coins and I want risk in meme coins, then I want that basket. That would be my thought process, but I'm sure there's plenty of people that's saying, hey, I want Bitcoin. Give me a couple layer ones. Give me a meme. Give me, so there is then a very good portfolio approach also. The other thing I would say, the question that I did see that I think, Billy, you were responding to, why would someone prioritize trading index perps versus investing index spot? And that, to me, that's all investor. That's the investor that decides it, whether they be institutional or retail. The only thing in the perps they have to consider when you're doing that stuff is relating to anything potential funding or anything like that. So to me, as long as you're educated, you understand everything in it, then you can make your call what you find as what appropriate it is. Obviously, us as a liquidity provider and a trading house, we always have a preference in trading in derivatives than coins, let's say, because for capital efficiencies.
And I guess like that brings it back again to, once we have that regulatory clarity, exchanges aren't kind of bogged down with sort of jumping through hurdles and like the kind of opaque standards that were there previously. They can actually focus more on that investor kind of education and bringing people along so that people are comfortable with what they want to do, if it's perps or if it's spot, and how they invest as well. So we're kind of getting there with the maturity and the regulatory clarity too. But on that kind of final question, I think one was in the chat was, what are the thoughts on OTC derivatives marketing crypto versus the exchange trade derivatives like perps? So I think like you were touching on derivatives there, Todd, and what like your preference is. Do you have anything to add on that question?
It to me is the way I look at that, and I see there is another question being typed now, but it's all the preference of the investor. Right, like, so whether I'm doing it as for me as an investor, or we do have a proprietary arm that is separate as an investor of our own partners' capital, It would be from an investor perspective, and that usually depending on your strategies, there has to be, you have to consider capital, you have to consider volatility, you have to consider, it's not only capital, you have to consider particularly, you have to consider how often you're looking at this. You have to consider custodials, right? So when you're holding a coin, and certain coins you want to get access to, some custodials can't hold all coins, and I don't think it would be appropriate to sit around and get 2 or 3 custodials because they hold these coins, they hold this, and they're capable of holding that. That's certainly not capital efficient at all. And so I think that's again, it's up to the investor. We work the numbers, and whatever best fits, that's the way we would look at it.
I completely agree. I mean, it's all sort of the reason why you have sort of these different products, all these different channels, is, you know, to service all different types of clients from our perspective. I mean, I wouldn't even point out whether it's OTC derivatives or exchange derivatives, just OTC versus exchange, right? Because that also happens in the spot market. You know, some clients prefer, you know, to self-service. Right, they want to manage their own portfolio. They want to do their own trading. They want to, you know, run their own algorithms and trading strategies. Some people like sort of the relationship manager model, where I'm able to call someone or telegram someone and get a price. So it's really irrespective of whether it's a spot or derivative. I think that the main difference between OTC and exchange is just, you know, the investor's preference, and typically. You know, when you look at sort of OTC, you're looking at bigger ticket sizes, you know, and so the liquidity on the exchange may have an impact to whether you want to trade on the exchange natively, or you want to go through an OTC desk, which is able to perform things like smart order routing to give you a more competitive price.
Interesting. And we're touching on like preference there, and kind of investor preference kind of links in with the last question on where you should, like if you're an investor and you want to buy perps, where you're going. I think from our point of view, Will, like we talk about the exchange ranking, and like we have our own focus on what, like a broad focus on what we look at exchanges in terms of security, liquidity, a lot of things. Like, yeah, I think what's that kind of focus for you, Will, when you're looking at those exchanges and perps and how to trade it? Because, you know, we've touched on FTX earlier, and there were pioneers in space, and then obviously different things happen. So what are the main things you kind of think of when you're looking at where to trade and or?
Yeah, I know. Previously I said no one of the neutral players, but in that sense, we're also a bit biased. We do, and maybe really also a different angle related to this question about exchanges versus OTC. We like clarity, transparency, and facilitate kind of the capital efficiency that Todd alluded to. So we are all about providing transparent, regulated benchmarks that everyone can really clearly refer to, right? So we, especially working with Gemini, whether it's baskets or single assets, using a standard reference rate that can be used by others, whether it's OTC clearing or other exchanges, having a more standard framework, to me, to us, from our perspective, that really helps, that you won't worry about how is this exchange calculating the mark price or the reference price? Am I going to get liquidated on this exchange but not on that exchange? If I have a long short position, it's complexity in terms of netting your positions, given how different exchanges doing things differently. So we, from our perspective, is we like to help exchanges and other players, whether it's OTC clearinghouses, market makers, to hopefully adapt kind of standardization of reference rates, whether it's single assets or benchmarks, to kind of move that clarity and potential capital efficiency.
And I guess that comes back again to regulation, like which we've touched on again. Once we have that clear framework, there will be that standardization, because right now it's horses for courses, and different jurisdictions can do things differently. And is that top down from the US? This is my final question. I'll let you guys go. Like, do you think that the US drives that standardization, and that's where we're going to see it from this year? Like, when there's frameworks from the SEC, is that going to filter down into other markets across the globe, or will it continue to be kind of done on a case by case? Todd, I think you jump in.
Yeah, I'm happy to chat about this. I don't think that I do know if it was 2 years ago, let's say, people were waiting to see what the U.S. were doing, just because the size of the market, right? And I'm just saying is the U.S., but because again, the size of their capital markets, people wanted to know which way they were thinking. That being said, there was no clarity, and people decided to, different countries and regulators decided, we got to sort this out. So they all started doing what they needed to do. So even though I think we'll get more clarity in North America, I'll use in general, right? And there are other countries that you need more clarity. I think Europe is definitely getting more clarity right now. Asia is one of the places that's been having a lot of clarity, and I do think what they're going to do is put a framework in, and then everyone's going to look at everyone else's framework, and they'll tighten it accordingly and try and make it. I think what you're saying is relatively consistent, but there'll be some countries that you can't do that, right? There's closed countries, and there'll be different regulations. But once North America comes online, where there's more regulatory clarity, at least from our opinion, once that is done, I think you'll start seeing the conversations, more conversations that are going on than even now, because they're all speaking to each other. All the regulators are speaking to each other, and I think that's great, right? That's the best way to move things forward, because their goal is to try and make it to a point where investors or the players in the field nothing bad will happen to them, or they're going into it with eyes wide open, right? And there's no fraud, there's no, and make sure that everything works out well. So,
and Todd, we
really are getting there.
We're actually seeing this much more locally, right? If you look at sort of Hong Kong SFC and Singapore MAS, they started on very opposite sides of the spectrum. If you look at the sort of the Hong Kong SFC regulatory regime, that started very, very strict, where only professional investors could actually get exposure to crypto, et cetera, et cetera. Whereas when you look at the Singapore MAS regulations, it was much more on the sort of the more relaxed side. As time has gone by and they've done sort of learnings within their own markets, you see Hong Kong actually getting more relaxed from its initial stance, and Singapore getting more tight from its initial stance. And so even from such a local market, you sort of see this sort of alignment just organically. When global sort of regulations come through, and when the US has its regulation and Europe have its own regulations, you will see that organically start to sort of align more closely, because at the end of the day, I mean, we're talking about Web3, right? It's a global product, and so travel rule from North America can't really be that much different from travel rule in Europe, and can't be that much different from travel rule in Hong Kong and Singapore, right? Because the funds need to travel, through the different sort of jurisdictions. So I think they'll come out with what they believe from the consultation. They believe should be the place, but as time goes by, I think it will start to look very similar.
Nice. You're nodding along, Will. I think you agree. Everything's going to eventually come towards the kind of migrate towards that kind of overarching framework eventually, right?
Yeah, and maybe for me, and a very positive note. I mean, what's happening in the U.S. is not something that should be like, oh my God, U.S. is doing this. It's the artificial negativity and that pressure that the SEC and the regulator have put on crypto in the past 4, even 8 years. The SEC is tasked to investor protection. They are not merit regulators. They shouldn't be saying crypto is no good. They really, as long as everything disclosed, it is to the investors. The investor has a right to choose and pick products that they want to invest or trade on. And really, the SEC part of the mission is for capital formation and foster innovation, and they haven't done that. So now, really, just in the U.S., getting back to what the regulators, what the government should have done in the past, 4, 8 years. But given where we are now, the excitement this is really exciting, and not just for the U.S., right? Too, everyone's talking about the whole globe in terms of space is feeling that excitement and the pressure, the artificial pressure coming off in the U.S. So I'm very, very excited about this year, 2025, and the next few years.
Nice. So it's less about what the SEC is doing and what they're not doing anymore. Is kind of the thing, letting the market kind of play out a little bit more rather than enforcement by regulation. But yeah, I think we'll wrap it up there. So I've probably gone a little bit over. Haven't taken up too much of your time today, but really appreciate all of you jumping on. Super interesting discussion, and thanks to all the everyone, all the attendees and the questions. It's really great. So yeah, hopefully let's do this again soon. See you later, guys.
Thank you very much, guys.
Bye, everyone.
Thank you very much.